When AWS went down last week, half of the internet went with it. Base froze, Polygon stalled, and Coinbase users opened their wallets to find some token balances displaying a big fat zero. One user on X called it a house of cards built on AWS. But Solana didn't even blink. And while AWS caused half of the internet to literally crumble to a halt, Solana kept producing blocks. But still, rival chain users once again took aim at Solana, which is on the receiving end of all sorts of FUD, from centralization and network stability claims, even to memecoin casino labeling. So I think it's time that we address the FUD one claim at a time. Look, Solana isn't perfect. It hasn't quite reached its final form yet, and we have seen plenty of growing pains. But the reality is that Solana's been running uninterrupted now for over 20 months without a single outage, while AWS, which is literally the backbone of half of the web, has gone down 4 times in the same period. And last week's was particularly important for today's discussion.
It hit a bunch of applications across the internet. So Signal was down pretty dramatically for the day. There was issues on a bunch of course, Web 2 websites. But the most notable within crypto is Coinbase had massive downtime. And then we also saw Base, the layer 2, go down, which of course, unsurprising given that it's a centralized sequencer, that the centralized sequencer, I guess, was running on AWS. And as a result, transactions were just failing on Base.
Once it became apparent that AWS was down, users of all sorts of Web 2 applications started to notice that half of the internet broke along with it. And as you'd expect, crypto Twitter descended into tribalism once again. Now, Marion Alfal pointed out that Solana didn't go down as the network isn't tied to a single cloud provider. Instead, Solana validators are distributed globally across different setups and regions, he said. And while AWS struggled, Solana kept producing blocks. How did your favorite chain do? Now, hundreds of posts obviously followed with shots taken across the L1 and L2 spectrum, but here's what really happened. Bilal shared an update across most of the major chains, and he accused many of them of fake decentralization. Some of the blockchains experienced severe outages caused by the AWS incident. Base's sequencer, hosted on AWS, failed, resulting in a 25% drop in throughput, transaction latencies, and inconsistencies in block production. Polygon faced Infura backend disruptions, stalling around 80% of transactions and causing wallet connectivity failures. Optimism, the ETH L2, also faced similar outages, data fetching failures, zero balance displays in wallets like MetaMask, and even delayed confirmations. Now, Arbitrum and Linear are both Ethereum L2s as well, and they too suffered similar Infura-caused transaction stalls and reduced network stability. Even Ethereum itself was slowed, but did not fully halt, and it maintained overall functionality. So credit where credit's due. Now, there's a reason for saying all of this out loud. It gives us perspective, and we can learn some important lessons from this. The AWS outage exposed crypto's hidden dependencies. Base lost 25% throughput when its AWS-hosted sequencer went down. Decentralization proved clearly to be the point of resilience that matters here, with the Solana account posting the following update. While AWS Cloud faces widespread service outages, Solana continues to operate without issues. With less than 10% of stake currently residing in AWS, Solana is geographically and data center diverse, preventing any singular operator outage from affecting the network's uptime or even performance. Base, on the other hand, issued an update informing its users that token balances would likely show 0 as a result of AWS dependencies. But in the meantime, Base users took the opportunity to FUD Solana once again, claiming that Sol was down because of AWS as well. Now, dgenwolf.base.eth caught major flack for this seemingly disingenuous take, and even the Ethereum community came out swinging against it. So I suspect he might have to deactivate his account and go into hiding for a while. Now, Toli thankfully came out taking shots at everyone who was fudding Solana, and then this user perfectly memed the Solana ecosystem, looking at all the L2s going into cardiac arrest with AWS. Then the Solana X account shared this post-mortem update, which reveals that Solana leads all major crypto networks in performance during the AWS outage with literally no throughput impact. Additionally, Solana is #1 in network resilience by far, with the lowest percentage of stake residing in AWS, 97.6% network resilience, compared to Base's 16.3%, and it speaks volumes. Now, the point of this video is not to FUD Base, because that would be counterproductive, and they do enough of that themselves. But Chase brought this gem to our attention, and apparently Coinbase is once again up to their old tricks, charging their poor users 40 cents to perform a Solana transaction that actually costs less than a penny. So, zooming out, here's the reality about the Solana outage FUD. Some people still love to say Solana always goes down, which isn't accurate at all. The truth is that Solana's been running flawlessly for over 20 months. AWS, meanwhile, has had 4 outages in the last 20 months: July 2024, December 2024, April 2025, and most recently in October 2025. That's 4 major incidents affecting millions of users in Web 2 and Web 3, while Solana kept running smoothly the entire time. Now, don't take my word for it. Go and verify this for yourself. And the easiest way to do it is to go to isdown.app, and there are other websites that offer this service as well, but you can type in Solana and hit enter. You'll see that the network is working just fine. Now, blockchains are imperfect systems, and you'll notice that there were 3 incidents reported in 2025. But if you scroll down, the most recent incident was on January 20th, when network faced massive congestion. Then let's do the exact same search for Base, or you can search for Polygon or any other L1 or L2 you fancy. Within Base, we see 23 incidents reported this year alone. That's 20 more than Solana. And the most recent were just days ago when the AWS system crashed the whole internet. But strikingly, we also see major incident reports from October 10th, September 21st, August 5th, and the list goes on and on. So I think that finally settles the network stability debate, at least for the time being. So let's move on and explore the range of use cases on Solana to see if these final elements of FUD hold up to scrutiny. Now, despite a thriving ecosystem and solid future prospects, Solana is often FUDded for being the home of meme coins, for being nothing more than a meme coin casino, when in reality, Solana dominates tokenized stock trading with 95.6% volume share over the past 30 days alone. Both stablecoins and RWAs are experiencing explosive growth in 2025. Circle's USDC reached $37 billion, and PayPal's PYUSD reached $1 billion this week as well. Now, it's clear that both Circle and PayPal, which are massive publicly traded companies, are not just issuing billions of Solana stablecoins to facilitate meme coin trading.
Folks within Solana really starting to question the value leak from Solana to centralized stablecoin issuers like Circle and Tether. I think there's been some posts highlighting something of the order of $500 million a year that's effectively being extracted and leaked out to those centralized treasuries of T-bills and money market funds, simply because of our real reliance on this duopoly of the 2 stablecoins, USDC and USDT, on Solana today. So I think, Solana DeFi in the whole is starting to wake up to the value that comes from a decentralized stablecoin, and a real sense that this value generated by stablecoins should be flowing increasingly back to the ecosystem and the holders of those stablecoins and less to the centralized entities behind them.
They are in fact paving the way for deeper liquidity and smoother settlement for institutional investors and of course business use cases that are being explored. And it's fair to argue that Solana wouldn't be a joint leader with Bitcoin ETF filings if, once again, the ecosystem wasn't thriving the way it is. Secondly, with the launch of popular tokenized stock trading platforms on Solana, we've seen a steep rise in on-chain stock volumes. Remora Markets recently topped $10 million in trading volume shortly after launching, and users can already go and trade popular stocks like Nvidia, MicroStrategy, Circle, which we just spoke about, and of course Tesla. Plenty of stock options are going to be launched in the coming months, but perhaps the most interesting opportunity for the time being is the arbitrage opportunity that's been presented. Now, users have called it free money, but essentially it boils down to capturing the difference between stock price on the exchange and stock price on chain. If, let's say, on Monday morning, the stock market hasn't opened yet, and the price of Tesla is $420, but you see that Tesla's trading at $400 on Remora. You can buy the stock on Remora, wait for the market to open, and then sell when the prices even out, essentially capturing that $20 difference. But let's zoom out and look at the real state of Solana DeFi here. New liquidity solutions are emerging fast. We see everything from tokenized T-bills and dApps holding SOL and stablecoins on their balance sheets, to Forward Industries, which notably raised $1.65 billion pipe to buy SOL and deploy it across Solana DeFi, generating yields. Then they're going to buy even more SOL.
We have aspirations for this thing to become a $50 billion plus publicly traded company over the next, 5 to 10 years.
Institutional flows are also quietly building under the surface, with record TVL across Solana DeFi now at $13 billion and climbing. We see protocols like Jito, MarginFi, Camino, and Sanctum are attracting both retail and institutional capital, and that proves that Solana DeFi has matured far beyond meme coin trading. So next time someone says Solana always goes down or Solana's only the home of meme coins, ask them which network kept running when AWS and literally half of the internet collapsed. Because in 2025, the facts are simple. The internet broke, Base broke, Solana didn't. If you enjoyed this deep dive and you want more unfiltered breakdowns like this, you can of course subscribe to SolanaFloor and check out our latest investigative series on Solana's infrastructure, DeFi, growth, and institutional adoption. I'll see you next time for more of the very latest.